Let's get to our next guest. He is Stephen Mnuchin, is, of course, former Treasury Secretary of the United States, Liberty Strategic Capital founder as well, private equity firm he runs. Stephen, good to see you this morning. Obviously, in our morning, we're all trying to make sense of the news. You heard Steve's, I assume you heard some of Steve's analysis. We've been making it as well as sort of, some say, the lack of intellectual rigor behind the numbers themselves, which really seem to just be whatever they wanted them to be in order to perhaps stop trade with certain countries and, I guess, create a manufacturing base in this country that is far larger. Do you think it's going to work?
Well, let me start off by saying the president's been clear in wanting to redo the trade agenda. And I think if you look at his economic plan, which is tax cuts, regulatory relief, trade, and energy, there's no question that the trade agenda is more aggressive than it had been in the past. I really break it into two pieces. One is the 10% across-the-board tariff, which, as I've commented on, that is a form of a consumption tax. I would suggest that they put that into the reconciliation bill and score it and use that money to pay down debt or fund tax relief. And I do think the market can adjust to a 10% tariff. It'll be partially adjusted in costs. It'll be partially adjusted in the currency. I think it's the larger tariffs that are called the reciprocal tariffs. I'm hopeful that those will be negotiated down, that those are tariffs that will bring people to the table and will negotiate them down. Now, for many businesses, it takes a while to move the manufacturing base. Apple's announced big investments in the U.S. That's going to take a while. I hope the president will consider giving people credits for those people who actually have made real commitments, not just announcements, but real commitments to build in the U.S., because there's a transition period here that needs to be adjusted to.
Yeah. Stephen, I'd love to, use your experience to get an answer to this. I mean, you are credited with navigating the Trump administration during your 4 years as Treasury Secretary extremely well. One of those people perhaps that pushed back on certain instincts that President Trump had during the first administration. Do you think that there is going to be a willingness to negotiate here? Or is this simply a reflection of what the president perhaps wanted to do in his first term when you were Treasury Secretary?
Well, the fact that they've characterized it as there's a baseline tariff and there's a reciprocal tariff, I hope that is that they're broadcasting they want to negotiate, and that on the reciprocal portion of this, they want to lower trade barriers and other items. And if we put aside how it was calculated and we just say these are very high tariffs, I do hope there's the ability to negotiate them down, because as we've seen, for certain businesses, it is going to take a long time to move that manufacturing base. And we've seen the stock market, particularly in certain stocks, react pretty negatively.
Right. I mean, I don't think we can put aside the way they were calculated, though, if we're talking about negotiating them down. David was kind when he said they lack intellectual rigor. They're not facts, right?
And again, I'm just looking at this morning. I believe they were calculated on a mathematical basis.
Yeah, no, they divided the deficit by the imports from that country,
right,
and decided that that number was equivalent to all the ways that the countries are cheating us, which you know is not true.
Well, they've made a conclusion that the market is efficient, and if there is a trade deficit. But again, I wouldn't focus on the way they've calculated it. I would focus on the numbers are quite high, particularly when you add up the existing tariffs on China and others in places like Vietnam. And I think that hopefully this will be a negotiation of let's get to the table, let's negotiate fair deals. I mean, I think as we've talked about on China for a long time, the tariffs were the only thing that got China to the table to negotiate. And there's no question that China's market has been closed to us for a long time, and our market's open to them. And if we could rebalance that and we could create an opportunity for U.S. companies to do business in China with a growing middle class, that's a big opportunity. So if these are forcing people to the table, it will be effective. If we stay at these levels and we don't issue credits or we don't negotiate, it will create big concerns for certain businesses that just can't move their supply chain quickly.
Well, yeah, like Apple, which of course makes an awful lot of iPhones in China, and it's hard to imagine them being 54% more expensive for the U.S. buyers. Stephen, you're in the business now of allocating capital. You run a private equity firm. I'm curious. You're hoping that there's going to be a negotiation period here. Are you sitting on your hands right now as you sort of wait and try to determine what the right time is? As somebody now who's in that business of allocating capital, does this give you pause?
I don't think it gives us pause. I mean, now that this is out in the market, people can evaluate the effects, and people can make a judgment as to where they think this will land and can invest accordingly. So I think it's good news because there's been a lot of speculation as to what this was going to be. I think now at least we have transparency to what it is. And look, I know the president. The president is a great deal maker. And I think we should take it at face value that these reciprocal tariffs are meant to create a fair and level playing field. And that will require negotiation. And I think there can be, some pretty significant things. As I mentioned, if Apple makes a big investment, it'd be interesting to say, okay, we'll give you trade credits against your iPhone so that you don't have to raise the iPhone price for consumers by the tariff.
There is a belief that it is going to lead to negotiation among these countries with each other. And we took note of one Canadian leader yesterday who said, and I'm quoting, "How can we trust that he'll honor any new agreement when, let's be honest, he violated the last one he negotiated?" How does he respond to that?
Well, I think they're referring to the USMCA agreement, which
Yep.
My understanding of the tariffs of everything that is USMCA compliant still fits into the agreement and doesn't have these types of tariffs. So the administration is honoring the most important aspect of that agreement.
Well, the question on the pain threshold, we're hearing now maybe they don't want to negotiate. I think it's clear that they should negotiate, right, from these high levels of tariffs. Just how much pain do you think they're willing to take in the stock market? We're, more than 11% off the 52-week highs right now. Downgrades in forecast for U.S. growth. Yields are falling, but not for the right reasons. I mean, how much do you think they're going to be willing to stomach before they really start to make some deals?
Well, I don't think it's the question of how much are they willing to stomach in regards to the stock market. The president's legacy, I'm sure he wants to have a good economy. He's trying to rebuild the economy. He's trying to do things that in the long term he thinks are good for the U.S. And I think he understands the economic risks, and he's not looking to create a recession, and I don't think we're going to have one. So I am hopeful that this will lead to negotiation. And that, if he wants to keep a tariff on everybody, as I said, a 10% tariff could be easily tolerated by the markets. And if they scored it and put it in reconciliation, they'd get credit for it, and it would become law.
But right now, we're talking about the biggest changes we've seen, at least in a century, to the global trading system. And I think we're talking about 23% overall tariffs rates, which brings us back to sort of the era of Smoot-Hawley. I mean, I assume, again, not to put words in your mouth, but if we maintain that, that would be concerning for you?
Well, I think there's no question that at those tariff rates, you will have the economy adjust. So there are certain markets in certain places where the tariffs can be absorbed by the seller. There's other impacts. There's certain businesses that will move supply chains and can work it out. But there's no question that at a certain level of tariff, particularly some of these high tariffs that are 40% plus, you will see the impact of imports going down significantly.
Did you look at doing this in the last administration?
We looked at the reciprocal tariff idea, and we liked that idea. There was actually a bill that was drafted that we began to talk about. We didn't at the time come up with what the numbers were, so that wasn't something we did. But the concept definitely goes back to, we want to make sure there's a level playing field and making sure that it's fair. And again, I use China as the example because that is the biggest area of concern for a long time. And there's no question that the previous tariffs had an impact on the trade deficit. and got them to the table. And they didn't live up to a lot of those deals. And, I would encourage, the U.S. and Chinese to sit down and look at that deal and make sure that China adheres to it. And that would be a starting place to reduce tariffs.
A big part of that period involved support and subsidies to farmers, for example. Do you think that's going to be the next chapter in the story?
It's a reasonable tool. I know the president wants to protect farmers, so if there's issues in regards to if the farmers get targeted, I'm sure he's going to want to provide subsidies to help them.
The other fun game, I remember this because you were on our air in 2017 and we were asking you about the stock market. At the time, it was doing quite well in the wake of his first administration. You said this is a mark-to-market business and you see what the market thinks. Yesterday, the press secretary was asked about the stock market and she said it's a snapshot in time. I wonder which one you think it is.
Well, it's both, and I do believe we're in a mark-to-market business. On the other hand, I remember sitting in the Oval Office when the president made the decision to put tariffs on China, which I did support, and we knew the stock market was going to go down a lot, and he announced it, and the market went down a lot. So, if anything, I'm surprised that the market didn't see ahead of time that the president has been telegraphing that he's going to make some very significant changes to the trade policy. And I think, as I've mentioned before, we've come into this administration with a market that was much higher priced than when we were last time. We have interest rates that are higher than last time. We have less fiscal room. So you take all those economic issues and you have to put them together. But I know the president is focused on the economy. And I think he wants to remake U.S. manufacturing. That's a big method. And I think there's got to be a pathway to get there. It can't all be overnight.
No, but do you think it's a realistic goal that Nike one day will make its footwear in the United States? Or, Apple would ever make an iPhone in the United States? I don't necessarily see that as a realistic expectation, certainly not for some period of time. It probably would result in higher prices, certainly for U.S. consumers. And then, Stephen, we've got the whole issue of automation coming and whether, in fact, even if you were to bring your manufacturing back, it would actually be people doing the manufacturing.
Well, look, Apple just committed a very large investment to the U.S., so they are going to make, I believe it's servers here, and that was a big investment. And my idea would be I'd give them trade credits. So if you commit to put $500 billion in the U.S., we'll give you trade credits so that you don't get charged all these tariffs on the iPhone coming out of China. Because you're correct, it would take them a long time to move the iPhone. There's other things they can move here. Now, as it relates to sneakers, I'm just absolutely not an expert on sneaker manufacturing, so I have no basis of commenting on that. But obviously, Nike can't keep production there at 46% tariffs. So either those tariffs need to be negotiated down or Nike needs to figure out a different manufacturing process. But these things take time, and there's no question you see different stocks reacting accordingly.
Yeah, on the negotiating point, a lot of people look at Israel, for instance, which ahead of the announcement lowered its tariffs all the way to zero and any trade barriers to zero. So, and we announced 17% tariff increase on Israel. So I do wonder if that says something about the administration's approach here. They're a close, obviously, security ally, a close trading partner, we're their biggest trading partner, and they did what President Trump wanted.
Well, I'd be a big advocate for Israel right now in trying to negotiate these down from 17% to the 10% minimum tariff. I agree with you. Israel's an important ally, especially given what they're going through. They're a great technology partner. So I'd be advocating they should be at 10%.
Stephen, finally, you joined us on air to talk about your interest and your new role, of course, at your firm in TikTok. This is some time back. I've been monitoring this and reporting on it to a certain extent. It appears a decision may be near to try to ensure that it remains here in the U.S. Under new ownership. Anything that you're hearing or expectations that perhaps it will be, for example, the Oracle Associated Group with a number of other investors, or do you still think you have a shot as well at being a part of any process?
Well, I was interested a year ago when I thought the process was going to be rebuilding the entire app, and I think we have a different situation now. I know they've been negotiating on the national security issues around it. A lot of these issues were things we put in place that led to Project Texas, which was a good start. So if Oracle does end up doing the deal, that's something we'd be interested in looking at. But, we're monitoring it, and I saw, not surprisingly, Amazon threw their name in the ring as well. So we're watching this as everybody else.
Yeah, Amazon and AppLove, and there's no shortage of potential people, buyers. Do you think they're going to end up with a deal here? In general, I'm saying,
so.
Not necessarily with one of those, just in general.
I think they should end up with a deal. Look, it is a great business, but I do think it should be controlled by U.S. investors, and the technology should be separated so that it's safe. There's no question that China would never let us control an app like that there. But, this has proven to be something very popular in the U.S. and something very effective. So I hope the president figures out a way. And let's not forget, we got to get the Chinese to agree to any deal along the way.
Before we let you go, since you were Treasury Secretary and you're no longer, you can comment on the dollar. And I would love for you to just comment on what's happening today. It's down more than 2%. Earlier I talked about sort of growth expectations, but it is a little strange because on all the tariffs, all the expectations were that the dollar would strengthen. And even Treasury Secretary Bessent said that would happen and help offset some of the potential impact on inflation. So what do you make of it?
Well, I think, as you know, there's different impacts on the dollar. One is the change in interest rates. So part of what you see now is the 10-year has come down significantly, and there's interest differentials between the U.S. and other currencies that impact the dollar in the short term. I'm still very bullish on the dollar. I really think it is the reserve currency. I don't see people wanting to hold euros or other currencies. I think we got to be careful as we use tariffs and as we use sanctions, but I see the dollar as the safe haven, and I wouldn't be at all concerned about what's a very short-term drop.
Stephen, great to have your voice on our air today. Appreciate you taking time. Thank you. Stephen Mnuchin, former Treasury Secretary. You're welcome.
As we go to break, look at some big laggards on the NASDAQ this morning. We got consumer discretionary, at least, down almost 7%. The banks as well, down 4.5%. RH is down 44%. We'll watch those names. Chips, a big drag. More on those names to watch in a moment as we are at session lows. Dow's down 1,500, and we're less than 1% away from taking out the September lows.